what's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started.
Hi everyone, welcome to Real Estate Investing Demystified. We're here in Dallas at this Brad Sumrok event with our good friend, John Chang.
August, how are you doing?
Great, man. Nice to see you.
Nice to see you.
Marcus&Millichap, he was on stage talking about all these data and KPIs and growth. Everything looks somewhat optimistic. It seems like somewhat of a soft landing. Tell us where we are at right now with the economy. I'm just going to fix your microphone here quickly. Where we are with the economy and also with real estate, with the market cycle.
This is a great question. The economy looks like we're coming in for a soft landing. That's the consensus forecast. Most economists believe that we're going to get there, and that's going to support the commercial real estate outlook. I think there's a lot of positive momentum. Interest rates are coming down. The Fed just cut rates. So I think that the financing, which has been the biggest problem over the last few years, is coming back into alignment. That's going to support increased activity, and a lot more investors are going to be able to make deals work. So I think the investment climate is going to improve over the next few months and carrying well into 2025. In terms of long-term performance, I think the momentum is there for sure. We have the positive demographics. We have a strong economy supporting it, and I think the momentum is going to carry through into the throughout the next cycle.
Great, awesome, man. You were on stage. You were talking about the concept of positive leverage. You just talked about interest rates being, decreased by the Fed. Talk to us about that concept. You have your finger on the pulse when it comes to investors nationwide. When you're talking about positive leverage coming into a deal and interest rates, break that down for us.
Yeah, but basically for the last couple of years since the Fed started raising rates, the cost of debt, the amount of money you're having to pay in interest for a loan has been greater than the yield on the properties. And although that could work because you can find ways to create value and lift that return on the asset, it's difficult, it's more challenging. So with interest rates coming down, there's a lot more opportunity for investors to come in and generate a higher yield on the asset than the cost of the debt they're borrowing against it, which will allow the deals to pencil, at least be revenue neutral over the short term, and then create value over the longer term. So there's a lot of opportunity there.
Yeah, and just to add to that, when you're in an up market and the market is, you're in a bull market, it makes sense to go in possibly in negative leverage. But when you're not sure if there's a recession coming or the market is somewhat choppy, you want to go in there positive leverage, and that's what they're seeing currently, I believe.
If you can. Sometimes the negative leverage works. If you look at the asset and you have the ability to move the needle on that property, create value, but you still have the wind in your face. And right now the wind is shifting and it's moving around. It's going to support the economy. It's going to support the investors. At least that's the prognosis. Something could always happen. It always does. But the momentum is clearly moving in a favorable direction right now.
And I got to admit, thank you for that. I got to admit to lots of our viewers or listeners, I learned a lot of stuff that I learned is from the data that your team puts together at Marcus&Millichap. And recently I watched a video on your YouTube show that talked about Canadian investors, and on stage you talked about that. Our firm CPI Capital being, we have our offices in Canada. We initially started in Canada, but we have also our offices in Florida now. But Canadians are the biggest investors in real estate, in U.S. real estate. And we're seeing that with our group putting together funds that we're putting for our deals. Give us some, you went into detail in your video and I invite everybody to go watch it. Maybe I'll put a link to it. But talk to us about, Canadian international investors. Give us a quick brief on that.
Well, the yield on real estate in the U.S. is much higher than it is in Canada. You also have a lot of tax provisions that are very helpful in the U.S. So Canada, as far as international investors go, Canada exports more capital into the U.S. than any other country out there. It's a good neighbor, and it's a lot of the markets are familiar to Canadian investors, but the ability to generate a higher return in the U.S. is a definite positive, and that's why a lot of Canadian investors are bringing capital into the U.S.
That's right. Last question for you. I know you're on a rush. On the graph, on the presentation you had, you showed the predictions for the interest rates in 2025, and I believe they were in the high threes. Is that your personal belief as well, that that's where the interest rates are going to be going?
So that's based on FedWatch. It's based on how Wall Street's placing capital. They're saying that we could see rates for the Federal Reserve overnight rate in the low to mid threes. Now, whether or not that actually materializes, there's a lot of variables in play. I do believe we have downward pressure. FedWatch may be a little over optimistic, but I still see downward pressure on rates over the course of the next year that will be favorable for the market.
Great. Thanks for that, John. Always great to see you.
It's a pleasure. Thank you.